Hello all of you, I hope you are doing good. Today we are going to do the revision of accounting standard 24, that is discontinuing operation. Very simple accounting standard. First of all, as you can see from the name of the accounting standard is discontinuing operation. This is not a discontinued operation, discontinuing operation, which is not yet discontinued. So why there is a need of accounting standard 24 discontinuing operation? Let's take an example that here. Suppose if I say this is a company called ABC Limited, they are working in a different segment, like the pharma they have, the food, education, airlines that is. Now they are planning to discontinue the airlines, suppose these segments. So what is going to happen? It's a discontinuing operation which is not yet discontinued. But when I look at the profit and loss account, what we see in the profit and loss account, we see all the incomes. I mean to say, the income from the pharma, the food, education, as well as the airlines that is. When we see the expense, we see the expense of the pharma, food, education, and the airline, because we are talking about the profit and loss account of ABC Limited. But when the profit comes, this net profit, this is not the profit of individual operation, that it's the profit of whole company. But I know that here, suppose if one of the operation, let's say airlines, is going to be discontinuing in future, that is, they're planning to discontinue this airlines business that is. So I want to see that how they are performing from this discontinuing operation, which is going to be discontinued in future. Because look at from the thing from the financial, the user of financial statement point of view. When we look at the financial statement, if one of the operation is going to be discontinued in future, so it is going to hamper to profit and loss account of that particular company in the future. So I want to see if any operation is a discontinuing operation that now. I want to see that here. I want to see that here. How? What is the performance at that particular operation? So I want to see that asset, liability, income, expense, the profit of that particular operation. So what we are to cover in this accounting standard 24, that is the first, what do you mean by discontinuing operation that here? And when we call it, first of all, the meaning of discontinuing operation. And they talked about a disclosure that here. Okay. So when should we start disclosing about a discontinuing operation and what should we disclose? The main things that first, what do you mean by discontinuing operation? What is the second thing is that here now, when we have to start disclosing about a discontinuing operation and what should we disclose? The three things is important. I am repeating that. What do you mean by discontinuing operation? When should we start disclosing about discontinuing operation? And third, what should we disclose that? Okay. Now, so first, I already told you that about the introduction that now is they say, what is the first? They say when a company decide to discontinue an operation, disclose under accounting standard 24. Disclosure under accounting 24 requires. So these standards applicable to all discontinuing operation aim to enhance the financial statement users' ability to project the future cash flow, earning, and financial position by separating information about a discontinuing operation from the continuing ones. As we know that here, out of these four operations, three will be continued in future, like the pharma, the food, and education. But airline is going to be discontinued, so we want to separate information for the discontinuing operation. So the users of financial statement, it will be easy for the users of financial statement to bifurcate how they're making from the continuing and how they're making the profit or loss, etc. liability of the discontinuing operation. Now here, the first point is what do you mean by discontinuing operation that here? So they say a discontinuing operation is a component that here. What do you mean by component? So component is a broader term that is. Component means it might be location, the product, group of services that here. They're discontinuing a component. Discontinuing operation is a component of an enterprise. Now understand this one. What it says that here now, here is a definition of what a discontinuing operation. How many points that we have? We have 3 points, A, B, and C. All these A, B, and C should be satisfied to call it a discontinuing operation. But here you can see that in point number A, there are 3 points that here. Any of those satisfy. So there are or here. So what I'm repeating that now to see this definition of discontinuing operation. How many points we have? 3, A, B, C. All these 3 points should be satisfied. So all these 3 points should be satisfied, that A, B, C. But in point A, we have 3 points. 1, 2, 3. Roman 1, 2, 3. So any of these one, if satisfied, we are going to do this condition A will be fulfilled that. Okay. So they say a discontinuing operation is a component of enterprise that the enterprise pursues single plan. What do you mean by single plan? Single plans means a detailed plan that they have. They want to discontinue the operation. So they say a detailed plan that they have. Okay, let me write it down, that a detailed plan that they have here. Okay, detailed plan that they have. So the enterprise pursues a single plan is a detailed plan that they're disposing of or substantially in its entirety. What is entirety that here? It is given in explanation 1a. So you can see that here. There are so many explanations given below this definition that here in point 1a. I will come to that point 1a. But what it says, the disposing of substantially its entirety, that here point 1a they say, such as by selling the component in the single transaction or by demerger, spin-off or ownership of the component of the to the enterprise shareholders. To understand what does it mean that here. First point A1. What it says that here they say the keyword entirety. We are selling the completely at one shot. We are selling that particular operation. Okay, so we are saying, suppose we are dealing in the 4 product. We want to sell the one particular product operation. We want to sell it that entirely at one shot. We are selling that. And this is disposing of what I will come to this explanation point 1a, 1b, 1c. I will come to all those points. Just listen me carefully. So what it says that here now, then this is dispose. This is the keyword. First is entirety, piecemeal, and abandoned. When it's come to the piecemeal, they say disposing of piecemeal such as by selling off the component, the component's asset and liability in its liability individually. So it is not, suppose if I want to discontinue particular operation, if I want to discontinue airline operations, so it might be happen that I'm not able to find one customer who is going to complete the, they want to purchase my complete that particular operation. So in that case, I'm going to do the settlement individually. The asset wise, I will sell the airline, I'm going to say aircraft, the furniture, like that, machinery. So individually I'm selling the asset, individually I'm selling the liability, I'm settling the liabilities here. So when I say that I have a plan to sell the entirety at one shot or in parts, we are selling that operation, or they say that here now, terminating through abandon. So it is not possible for me to sell that particular operation in one shot. And at the same time, it is not possible for me that here to sell it for me supposed to sell it in a individually. We're abandoned, we just close it down that here. Example, suppose we have one operation in a particular area and suppose the war is going on in that country. Suppose we have some operation in XYZ country and suppose the war is going on in that country. So it is not possible for me to find it out the customer for that particular operation because I want to sell that complete operation. Not possible. At the same time, it is not possible for me to go there and individually sell the asset and individually settle the liability. Not possible. Just close it down that here. So that's the terminating through the abandon. So in the point number 8, they say that here they say the single plan, the detailed plan here for to disposing of the entirety or the piecemeal or what abandon that here. Any of these happen, not necessarily all of these, obviously any of these 3 is going to happen. Okay. Then this is point number, first point of A. Now point number B says that that represent a separate major line that here. I will come to separate major line. First, I will come to the point number B later. Now first, let's talk about that here now. That there are 3, there's something is mentioned in the explanation 1a, 1b and 1c. One is related to entirety. What it says that here they say, when a component is sold substantially in its entirety, they say the outcome may be net gain or what? The net loss. It might be happen when you sell the operation that here, I don't want to continue the airline business. So when you sell that operation, it might be profit or it might be loss. A binding sale agreement is made on a specific day. There's a agreement happen that we are going to sell the complete operation. Then the actual transfer of possession and the control may happen later. Actual transfer of the asset, liability or the possession, the control we can transfer later date, but agreement has been happened. And this payment to the seller may occur, they may ask you in an MCQ, payment to the seller may occur at the agreement date or transfer date or even over extended future. It might happen the day we are doing the agreement, it happened that day. When you're transferring the asset liability, it might happen that day or at the later, it doesn't matter that day. What is more important is with that we have a binding sale agreement has been happened that. Okay. Now, when it's come to the piecemeal, something they want to explain in point number 1b. So when I go to point number 1b, it says that in the piecemeal sale of asset and liability component, they say selling of the component asset and liability, it's liability individually or in a small group. If we are selling the asset or liability or settling the liability, selling that individual or a small group, like the furniture, all furniture, okay, all the machinery, like that we are doing the settlement there, we are selling the asset. The overall outcome may be net gain or net loss, but individual asset sales or liability settlement may have a different effect. Correct that. What they are saying to you that, overall, completely when you sell all the asset, when you settle all the liability, it might be a profit or loss. Correct. But when you talk about individually that, if on individual basis, what they are saying, suppose I have 3 assets, asset 1, 2, 3. I sell it at the profit of 10. I sell at a profit of 20. I sell at a loss of, let's say 35. So individually they are at 2 at profit, it loss. Overall we see I am at a loss of 5. This is what they are saying that here. Okay. So individually it might be different. Overall obviously it might be different. Then they say that here now, sales and settlement may occur over a period. When they talk about the piecemeal, individually we are doing the settlement that I have. So it will take time. It is not going to happen at one date. It will take over. It may be more than one financial year. It may happen. So they say the disposal may extend beyond a financial reporting, what I said to you, and all the piecemeal disposal and settlement must be part of a single coordinated plan. You should have a proper plan, but it may take more than one financial year. You are selling them individually, no problem in that. You are doing the settlement individually of all the liability, no problem in that. But you should have a single coordinated plan how we're going to proceed for that. Okay. Now the third one, we can discontinue the operation that now is through the abandon that. They say terminate. This abandon means the terminating an operation without substantial assets. Not possible for me to go to that particular country in which we have an operation, the war is going on there. So to close down that, to substantiate sell all the assets of the war is going on. How we can do that? Then say changing the scope or the manner of operation does not constitute the abandon. It means if we change the manner or the scope, now we increase the production. That doesn't mean that we are or decrease the production. That doesn't mean we abandon that. Okay, this is what they're saying. Now this is the first condition, entirety, piecemeal or abandoned. Then they say that that particular operation that we want to discontinue should be a separate major line of business or a geographical area. I said, no, sir, business or geographical area of operation we covered in accounting standard 17, that is segment reporting. So are we talking about segment reporting AS17? Listen carefully. They say first we have to understand what do you mean by separate major line. So it is given in explanation point number 2. So when I go to point number 2, they say that here now, separate major line of a business or area of operation. What does it mean? A reportable segment, business segment or geographical segment as defined as 17 segment reporting. So they say yes. For a separate major lines is what they find in AS17, that is segment. So say AS17, okay. But there's a 10% threshold was there, okay? 10% threshold was there. They say would normally, it's a keyword. They use the word normally satisfy the criteria. It would be represent separate major line, business or geographically area of operation. They say what they have defined business segment or a geographical segment as per accounting standard 17, that normally what we have to cover here. It means it's not a rigid rule that it should be 10%. Do you remember the 10% criteria of the asset or the revenue or the profit or loss that they have the threshold limit that here? If it is I'm going to say they are saying that if it is segment reporting that here, reportable segment there, we can say it's a separate measure, but they didn't use that here, or they specifically use the word normally. What they say normally means it is not a rigid rule, it should be 10%. It might be 9%. Still, we are going to call it separate major line that. Okay. So they say that here now, for enterprise operating in a separate major line without a segment reporting that now, it says, for enterprise operating separate, enterprise operating a single segment without a segment reporting a major product service may meet the criteria. What they are saying basically that for enterprise operating a single segment that here without a segment reporting that here, it is single segment. And if you want to discontinue that here, so I'm going to say line may meet the criteria, major product or services line may meet the criteria. Basically, they are telling us that the enterprise operating single segment only without a segment reporting that is. So there is no segment reporting is there, but a single segment is that here. Okay. So basically, they want to convey you the message here that here it is not necessary that it should be 10%. Normally they say, normally what is this reportable segment as per AS17, sorry. Okay. So they say normally that here. Okay. So it's not necessary that here. So even though it is a 9%, we are going to call them the separate major line. So they give us certain examples that here. So they tell us that here now, example, if you see that now, Company XY plan to sell one restaurant that is containing only 5% of total revenue. It is not a separate major line, just represent the 5% that here. So this discontinuing operation does not represent a separate major line. So we don't have to disclose as per accounting standard 24. Now group MN decision to sell with airline business consider 25% of the total revenue. It's a reportable segment as per AS 17. So it's a separate major line here. It's a discontinuing operation. Okay. Now, when I come to the third point, they say that that can be distinguished operationally or financial reporting purpose. Now, the explanation is given in point number 3. They say that can be distinguished operationally, a different identity for the airlines. It's a different identity. Or for the financial reporting purpose. When I say financial reporting purpose, that is, now go to this point number 3. Distinguishable component operationally and financially. For a component to be considered distinguishable operationally and for the financial reporting purpose as a discontinuing operation, if all the following conditions are met. They say its operating asset and liability can be directly attributable. Now we know how much is the asset of that operation, how much is the liability. We know that, for example, you want to discuss the airline. So we know how much is the airline's operations asset and liability, how much is the revenue from them, and at least the majority of it operating, how much we know how much is the expense. So we know the expense, income, asset, liability of that particular operation that is. Okay. So they say note, asset, liability, revenue and expenses are directly attributable if they would be eliminated when the company is sold, abandoned, or otherwise disposed of. They think, how can I say it is directly attributable that asset, liability, revenue or expenses, if those asset, liability, revenue, expenses is not going to happen that way if we don't have that operation. This is what they are saying. So we can say that asset, liability, expense or income is related to that particular operation. If a component has a debt, the interest and the financing costs are attributed. I mean to say, if component has a debt, for example, if we have different operation like the pharma, education like that, we have the airline also. We want to discontinue. If you have taken certain loan for that discontinuing operation, that is the airlines, we know how much is the loan, how much interest we are liable to pay on that. This is what they are saying. Okay. Now, this is the definition of what a discontinuing operation. So, what is it? It's a component that we make a detailed plan for the end to sell it, dispose of entirety or in piecemeal or in abandoned. It's a separate major line that here, not necessary that it should be as per AS 17, but they say yes, normally it is as per AS 17, nor they use the word normally. That means it is not necessary it should be 10%, even though it is 9%, we can call it a separate major line. And the third part is say we can distinguish how much is the operationally and financially. We know how much is asset, liability, revenue, expense of that particular operation. So if all these conditions are fulfilled, we are going to call them a discontinuing operation. The first part that we have discussed is what to mean by discontinuing operation. Now before I come to that here, now when should we start disclosing about a discontinuing operation? Before that, one thing that I want to discuss with you, that is this activity which are not considered as a discontinuing operation in general. First, they say, now remember these 4 things that in here, they not considered as a discontinuing operation that here. So what it says that here first, gradual evolution, phasing out of a product line or a class of service. What is phasing out that here now? It's change in the demand in the market. So we phase it out. It doesn't mean a discontinuing operation. It's example like it. Suppose initially, when the mobile came that year, is a key. Okay, with the key or the type 1, 2 like that. Got a touch screen come that year. Suppose the company Samsung, if they are moving from those types of mobile to the touch screen mobile, that doesn't mean they are the discontinuing operation. It's still continue. They are phasing out that. You got the point? Now initially the bikes come, there's a kick in that. Now it is a self-start comes that. That doesn't mean that discontinuing operation. They are moving towards the demand, the change in the market. Then there's a discontinuing out of several products that year within the ongoing line of business. What do you mean discontinuing out of several products? Suppose this is a company with several products that year. Some product, for example, they are doing the production of 10 types of ice creams. But they say no, these 2 ice creams not have much demand in the market. So close it, don't do the math. That doesn't mean they discontinue. Overall, the ice cream still the production will go on. But out of those 10 flavors there, they want to close on 2 flavors they want to discontinue. That doesn't mean it's a discontinuing operation. Then there's a shifting of production, some production or marketing activity for a particular line of business from one location to another. We are moving from one location to another. That doesn't mean discontinuing operation, just moving that here. And closing of facility to achieve the productivity improvement or the cost saving. I have the 4 process that is process 1. Okay, 1 minute. Process 1, process 2, process 3, process 4 is the final product. I say process 3 is very costly, so we outsource that. So when I outsource that, that doesn't mean that we have discontinued the operation. Operation is still discontinued. But when you do the production, the process is very costly that is. So let's outsource to someone who can do it at the cheaper rate that is. So that doesn't mean you're discontinuing operation. Now, not all infrequent events are discontinued. No, discontinuing operation is not going to happen regularly. Very rarely happens that here. So it's infrequent. It is not frequent, it's infrequent. That doesn't mean all infrequent events are discontinued operation. I say we don't sell the fixed asset. Rarely we sell. I purchase this mic. I don't sell this mic that day. My nature of business is not to sell this mic that year. But it might happen after 5 years, 10 years, I say, no, let's change it that year. So it is infrequent. That doesn't mean it's a discontinuing operation. Okay, this is what all infrequent events are not discontinuing operation. Then they say classification under AS24 does not question the enterprise's ability to continue the going concern. Yes, if I say I have 4 operations, one I want to discontinue, that doesn't mean the going concern assumption is not present. If still I am doing the business for the other 3 operations out of 4, I want to discontinue 1. Still I can do I am doing the operation for the other 3 that year. Or I may increase their business as well that year. So what's going to happen? That doesn't mean that discontinuing operation does not give the ability, and you cannot call it as a going concern assumption is not present. Okay. Now we discuss about what to mean by discontinuing operation. Now the second stage that here now. When should we start disclosing about a discontinuing operation? And the last stage will be what should we disclose? Now understand that. When should we start? When should we start disclosing about the discontinuing operation? Now understand that. When the initial disclosure event happen, we should start about disclosing about a discontinuing operation. What is the initial disclosure event? The initial disclosure event is the occurrence of one of the following. How many points that they have? 2, A and B. Any of one happen, we should start disclosing. So one of the following, whichever happens occur earlier that year, the enterprise entered a binding sale agreement for substantially all the assets of the discontinued operation. So when the enterprise enter into a binding sale agreement, they enter into an agreement, even the possession not yet transferred, that the payment is not yet received, but still, if they enter into a binding sale agreement, then the initial disclosure event happen. After that, whenever you prepare a financial statement, that you should have to disclose them. Okay. Now they say, even though we have not entered into binding sale agreement, they say the enterprise board of directors or similar governing body has both. What both that they have? Approved a detailed formal plan for the discontinuing, and they say made an announcement. Now understand, we have not yet entered into a binding sale agreement, but they say what the board of directors of the company or the similar bodies that they've approved a detailed plan. What is approved a detailed plan? Point 8 is mentioned there. What is approved a detailed plan that they have made includes what it includes that here? Asset identification, how we can dispose of, how we can sell them, that expected completion period, affected location, how the employee will be compensated because they are not going to do the job, they will be terminated, on how much estimated proceed, how much will you receive on the sale of assets. These all they have make a detailed plan that year. Okay. And at the same time, they have made the announcement in the public that year. So the board announcement that here, announcement is considered effective if it disclose the main features of the plan to those which is going to be affected by it, such as the lenders, stock exchange, trade payable, trade unions, demonstrating the enterprise commitment to discontinue. So what happened? They have made a plan, that they made an announcement. So those specialties are going to be affected by it. It's a listed company, the stock is that they informed the trade payable, trade union, like that, the customer lenders that year, the loan from whom they have taken a loan. They have done the announcement to them that year. So what is going to happen when they have made a detailed plan and they have made the announcement? Even though that they have not entered a binding sale agreement that year, still we are going to call it as an initial disclosure event happen. So when they enter into binding sale agreement, or that they have made a plan and they have made an announcement of it, any of these two happen, that year initial disclosure event happen. So first we understand, we discuss about what is discontinuing operation. Second, we discuss about that here, what is initial disclosure event. Now the last step, that is what should we disclose? Yes, initial disclosure event happen. Now we have entered into binding sale agreement, or we made a detailed plan and we made the announcement of that here. Now yes, it's happened. Now what we have to disclose? So they say that here initial disclosure. So they say we have to disclose. Remember, all these things we have to disclose in notes of one except this one which I have highlighted in red color. They say description of the discontinuing operation. Description of the discontinuing operation that here now in notes to account. Business or geographical location that here, as per the A17 that here that we want to discontinue in the notes to account. The date and the nature of the initial disclosure. What happened? Binding sale agreement. Or you have made a detailed plan and made a disclosure of it, this announcement of it, notes to account. Date or period of expected, how much time it will take that in notes to account. The book carrying amount means book value. The carrying amount as of the balance sheet date of the total asset to be disposed of, the total liability to be settled in the notes to account. How much is expected, how much you will receive. The carrying amount they are saying, so carrying amount that here, book value of the asset and liability. Amount of revenue expense in respect of ordinary activity attributable to discontinuing operation. Ordinary activity, don't get confused with continuing operation. Ordinary activity is normally from that operation that you want to discontinue. Suppose airlines I want to discontinue. How much revenue and expense I have from that airline business. In the notes to account, we have to disclose them. Okay. But only one thing, how much the profit or loss that we have to mention the P&L account. So P&L account, even as per the schedule 3 also that here, there is a separate column in how much the profit or loss that you have from the discontinuing operation that you disclose separately there. The net cash flow from the operating, investing and financing activity, it should not be disclosed in cash flow statement in a notes to account. So everything we have to disclose, the revenue, expense, asset, liability, okay, the cash flow, everything notes to account except the profit we have to disclose in P&L account separately. Okay. Now, one thing more that they say one more thing, that is disposal of asset or settlement of the liability binding sale agreement. So we have not yet sold it. They say when a business sell, okay, they have sell it. Okay. Business sell asset or resolve the liability relating to discontinuing operation, enter a binding agreement for such. It must promptly include the relevant details in financial. Not understand. They have gain or loss on disposal of asset or settlement of. We have sold the asset, we have settled some liability. How much profit or loss that we have from particular that transaction. They say it should be mentioned the pre-tax gain or losses that here, or income tax in a profit on this in a profit and loss account. So we have sold, we have not yet completely. We have 10 assets, we have sold out of 10. Suppose 6 assets. How much profit or loss on that? We have settled the liability. How much profit or gain or loss on settlement that we have to show it separately in P&L account. Second, they say net selling price or range of price after deducting expected disposal cost for asset under binding sale agreement along with expected timing of cash flow receipt and carrying over the net asset on the balance sheet date in the notes to account. Understand? What is the difference between point A and first and second? In the second point, they are saying what is the net selling price range of that you are expecting that we enter into binding sale agreement. How much we are expecting that we are to receive on the sale of that particular asset that year, and after adjusting the expenses that on the sale that okay, and what is the book value which is and what is the expected timing of the cash flow when you are to receive the amount, and what is the book value that we have to show in the notes to account. Not so important from examination point of view. Okay, but only two things we are going to reflect in a P&L account when we dispose of that, how much profit. Okay, now first one thing, when we have sold some asset or we have settled some liability of that discontinuing operation, how much profit or loss we have, that we have to sell in P&L account. Second, in P&L account that here, how much overall that here, not on the disposal of asset or settlement of liability from the ordinary activity. Suppose the airline business we want to discontinue, how much normal profit or loss that we have from the airlines operation that we are shown in a P&L account. That's all. And if some asset and liabilities settled that year or sold, how much profit or loss or disposal of asset or the settlement of liability that we have to show in P&L account. This is what they are saying. Now, first we discuss about what do we mean a discontinuing operation, when should we start disclosing it, and what should we disclose. We discuss about it. The last point, obviously, once it is discontinued, thereafter it will not be disclosed. Okay, the last point, there's some important point, key disclosure requirement. What it say, updating disclosure that is. Now, what happened? It might happen the first year. If it is piecemeal, that it's going to take time. So initial disclosure even happened 31st March come, we disclose whatever mentioned that year. But next year that year now, 31st March come, next year 31st March come, still the completely is not disposed of that year. So change in the information might come, so we have to update the disclosure. So they say in a notes to account disclosure, significant changes in cash flow for assets or liability after initial disclosure along with the event causing the changes. Continue disclosure in financial statement until discontinue is completed. So until the completely it is discontinued, we have to disclose the information in financial statement. Second, abandon or withdrawal or discontinuing operation. Very weird that. Once we have enter into binding sale agreement, so or that we have make a detailed plan and we made an announcement of it. Still later on we decided we don't want to discontinue. It might happen. Remote possibility, but it might happen. We don't want to discontinue. We made a plan to discontinue. Now we change our mind. We don't want to discontinue that. So we have to disclose that we are not planning. We are not decided not to discontinue that. It should be whatever separate major line, the separately we have to disclose for each discontinuing operation. Okay. Now restatement of prior in a P&L account or balance sheet, we do the comparison there. Okay. Now they say for the comparison means currently in the previous year. So during the current year, you mentioned about a discontinuing profit or loss. For the same, we have to maintain a profit or loss of the from the discontinuing operation of the previous year also to compare it that. Or whatever in the notes to account, we have to disclose the previous year also figures of that discontinuing operation for the purpose of comparison. Initial disclosure after the balance sheet date. Now, this is AS4, you know that event occurring after the balance sheet date but before the approval. If initial disclosure happen after the balance sheet date, so it as per AS4, it will be treated as non-adjusting event. Okay, non-adjusting, we just have to disclose in the approving authority as per AS4, that is the board of directors report that. Okay, this is the interim financial reporting, which is AS25, which I have not yet covered. I will cover the next, will be on the AS25 only. But they say, just I will discuss it, but detailed discussion will come related to interim financial report in the next accounting standard. In interim financial report for a discontinuing operation, follow the AS25 interim financial reporting, disclosing what? Significant post-annual reporting period activity or event for the discontinuing operation and significant change in timing or amount of timing. Now, of the cash flow for asset to be disposed of, liability to be settled. What they're telling you that here. Now, suppose, for example, 31st March 2026 come that. Initial disclosure event happened before that, so we disclose it. Now we are preparing interim report. We prepare quarter one report of from April to June 2026. Something happened in those 3 months that year that changed my certain figures that of these discontinuing options that we have to disclose there in the interim financial reporting that year. Okay, this is what they are saying. Now here come to super 100 question, that come to question about 77. What it says that here now. A consumer goods producer has changed the product line as follows. What they have changed? From January 21 to September 21, they produce a dishwashing bar and cloth washing bar. So per month from 2 lakh both. It was common. January to September it was common 2 lakh. Now October to December, now it was 2 lakh. It was 1 lakh here. Now here it is increased. So it decreased from 2 lakh to 1 lakh. Here it is increased. Here it is increasing that here now. From 2 to 3. So they say in January 22 to March 22 that year, it is 0 here and it is still increased from 3 to 4. So they ask us that the company has enforced the gradual enforcement of the change in the product line on the basis of overall plan. The board of directors has passed a resolution in March 21 to this effect. The company follows the calendar year as its accounting year. You are required to advise the company whether it should be treated as a discontinuing operation or not. Is it a discontinuing operation or not? The answer is no, it is not a discontinuing operation. They are gradually moving that year from the dishwashing to the cloth washing bar that year. So they're gradually moving. What is the more demand in the market? They are not discontinuing the operation of bar. They're moving the product that here within that segment only. Okay, this is not a discontinuing operation. Now we are come to question number 78 that here. Now this is Rohini Limited is in the business of manufacturing a passenger car and commercial vehicle. So they are doing the manufacture of two things. What they are doing is the passengers car and the commercial vehicle. Now the company is working on a strategic plan to close the production of passenger car and to produce only commercial vehicle over the coming 5 years. So what is their plan? That over a period of next 5 years, they want to close down the production of the passenger car and they want to produce only the commercial vehicle over the next 5 years. However, no specific plan have been drawn upon the sale of neither the division nor its sector. They have not made a proper detailed plan. So we cannot call it discontinuing operation. So as part of its prospective plan, it will reduce the production of the passenger car by 20% annually. It also plans to establish another new factory for the manufacturing of the commercial vehicle and transfer the surplus employees in a phased manner. You are required to come. So what they have made a plan that here now, they want to discontinue the passenger and commercial vehicle. They want to increase that here. But they say that here over a period of next 5 years that here, but they have not made a detailed plan of what that year, how they will dispose of the asset, how will they settle the liability, that like that. They just say we will reduce it and they will increase another, but they have to make a proper plan that year. So they ask a certain question that you are required to comment first. A mere gradual phasing out in itself can be considered discontinuing operation. The answer is no. Gradual one production reducing and another is increasing is not a discontinuing operation. No. Gradual phasing. I give an example of that here is the self start. Okay, from the kick to self start. We discussed about the previous question 77, the bar from the dish to the what they say that here from the dishwashing bar to the cloth washing bar. Now this is not a discontinuing. If the company passes a resolution to sell some of the asset in the passenger car division and also to transfer few other asset of the passenger car division to the new factory, does this trigger the application AS20? The answer is no. They should make a detailed plan. They should have to make it that year. How they want to discontinue. That is not a discontinuing operation. Would your answer to the above be different if the company resolved to sell the asset of the passenger car in a phase out? Okay, this you can say. If they have made a phase out but a time bound, they make a proper plan. Phase out means time bound manner, means phase out in a piecemeal, it is basically. So they are doing a piecemeal. It's a discontinuing. DO is a discontinuing, not do. It's a discontinuing operation. Okay, yes, it's a discontinuing operation. Why? Because they make a plan that is phased out over a period of time, a time bound like the 2 years, 3 years, whatever that is. If they have made a time bound that year, okay, how they have made a detailed plan, how they will dispose of these, how they will discontinue, and then it's a discontinuing operation. That okay. So this is all about accounting standard 24. That an examination they may ask you this question that here on a case study based scenario based question. They might ask you. It's the theoretical disclosure accounting. So three things. Remember that what do you mean by discontinuing operation, when we call it initial disclosure event, that and what should we disclose. So initial disclosure event we call them discontinuing operation, that when it's a component that here that we made a single plan for the entirety of the piecemeal or the abandoned. It's a separate major line and we distinguish operationally and financially that year. Now initial disclosure event happened that year. Now any of these happen is the binding sale agreement, or even though there is no binding sale agreement, but we enter into we make approved a detailed plan which is approved by the board of directors, and we have made an announcement those will be affected because of that particular discontinuation. And we discuss about what we have to disclose. Remember just two things that here, whatever profit or loss that we have from that discontinuing operation, we have to disclose separately in P&L account. And if certain asset has been sold out, or we have to do the settlement of certain liability of that particular operation, we have to settle. We have to mention separately in P&L account how much profit or loss that we have from that particular operation. That is all about accounting standard 24. That is for today. Take care, all of you. Bye bye. If you like something, don't forget to do a comment in a comment section. I will give a reply. That is for today. Take care, all of you. Bye bye.